Hello and welcome to this second part of video series on group accounts disposals. In the first part we understood the principles of disposals and understood how to account for such disposals in parents' individual financial statements as well as in consolidated financial statements. In this video we'll be applying those principles and those accounting rules to a particular problem, a question. So before diving into it, let's just quickly recap of what we learned in our previous session. When parent disposes of a subsidiary, there will be either gain or loss arising through disposal. Parent will record such gain or loss in their individual financial statement, in particular statement of profit or loss. Parent will calculate that profit or loss or gain or loss by comparing the proceeds it receives, so sales proceeds it receives on sale, with the carrying amount of the investment it is disposing of. Okay, and usually the carrying amount of disposal would be the original cost that parent paid to acquire the subsidiary. Now if you remember, when we dealt with consolidation questions, the investment in subsidiary usually sits in parents' individual financial statements under non-current asset heading. So that's exactly what we will be deducting from sales proceeds to work out profit or loss arising on disposal. So that's one thing, that's for parent. And then we also need to work out the profit or loss arising for the group. Okay, and that is calculated in this fashion. So in order to work out profit or loss arising on disposal for the entire group, not just parents' individual financial statements, we need three things. We need sales proceeds, first of all, which is going to be the same as we used for working out parents' profit or loss. And from sales proceeds we would be deducting carrying amount of goodwill and also carrying amount of the net assets of the subsidiary. Okay, and the carrying amount of the net assets of subsidiary will be the value of subsidiary's assets minus liabilities just before the disposal. Okay, so that's one thing. And for goodwill carrying value, it will be the goodwill originally recognized at the time of acquisition minus all the impairment losses. That would give us the goodwill carrying value. And at the end, before working out profit or loss on disposal, we will add back any remaining NCIs on the date of disposal. Okay, and that would give us profit or loss on disposal. So it's not very difficult concept to understand. So now let's see how we can apply those principles to a particular question. And the question we will be looking at is question number 1, interactive question 1, called profit or loss on disposal, and the page number where you can find it is page number 575. So let's read through the question information first and then we will solve it together. Requirement is to calculate profit or loss on disposal in Champion PLC's individual account. So we'll need to work out profit or loss arising for the parent, who is called Champion, and then part B is to work out the same thing in consolidated accounts, assuming that in respect of goodwill there has been no impairment and then there is an impairment loss of 470. Okay, so that's what we will be doing. There is a pro forma to fill out as well. If you want to pause the video at this point, get yourself ready, get the question and a piece of paper. You can work through the question with me. All right, So yeah, now let's quickly read through the information given. Not much given here, but less sufficient to work out the profits. So Champion PLC has held a 70% investment in Hercules Limited for many years. On 31st December, it disposed of all of this investment. Further details are as follows. Consideration transferred on acquisition is 2,000. Hercules Limited's net assets at the date of acquisition is 1,900. Sales proceeds is 2,100 and Hercules Limited's net assets at the date of disposal is 2,400. Please notice we know what the net assets of Hercules is or was on date of disposal, but we do not know the goodwill, so we need to work out the goodwill. And just in case, if the net assets figure is not given, you know how to work it out. Is assets of Hercules or the subsidiary minus liabilities. And also note, net assets means the equity part or equity section of the subsidiary. So either you deduct liabilities from assets, that would give you net assets, or you can simply take the total of the equity section of the subsidiary. That again would give the net assets. Okay, so please do keep that in mind. So we're going to start with working out the profit or loss for Hercules individual financial statements. So I'm using Excel to work through it, but you can use something else if you want to. All right, let me just make it slightly bigger so you can see what's going on. So for Champion PLC, separate financial statements, first of all, the proceeds, we know that, let's put a pound sign on the top so we know that we are working in pounds. Yeah, okay. So we know, what's the name? Champion PLC. Yeah, Champion PLC has received 2,100 as proceeds. Now, original cost, the question mentioned, the original cost, the consideration transferred on the date of acquisition was 2,000. So remember, when you're working out profit or loss for the parent, the original consideration paid or original investment made is what is compared with the proceeds. So if I deduct £2,000 from here, I would get the profit or loss on disposal. This is recorded in statement of profit or loss of the parent. Simple. Now let's move on to the next part where we are working out the consolidated financial statements related profit or loss on disposal. So the first thing we are considering is as if there was no impairment. Okay, so no impairment. If I write IMP, I think that should be fine. You would understand what I'm saying. So no impairment. First of all, we want to see what profit or loss would be if there is no impairment. Again, to work out that, what we'll need, actually let's use two columns here, so it's easier for us to do subtotals and then final totals. So sales proceeds doesn't change really. What we received is what we have received, 2,100. And as the working suggests, we need to remove everything related to the subsidiary from here. So we need to remove the goodwill, we need to remove the net assets, okay, and the NCIs at the end. Okay, so what do we have? So first of all is the carrying amount of goodwill is what we need to deduct. Now you know that goodwill is not given in the question. Okay, it's not there, so we need to work it out. And you know how to work out goodwill, right? So goodwill, originally when you work out the goodwill, you take the consideration transferred. Okay, so let's use the middle column to work through the goodwill. So first of all, let's work out the goodwill at the date of acquisition, then we can take away the impairment. But in this particular part, there is no impairment. So whatever goodwill we find will be the goodwill at the acquisition and also at disposal date. So 2,000. Now NCIs at acquisition, we need to work out what the NCIs at acquisition were. Now, does the question say what kind of method is the company following? Da, 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 da. Yeah, the question is silent. It doesn't necessarily say whether it is a full goodwill method or it is a proportion of net assets method. So it's safe to assume in this case, because the fair value of NCIs is not given, we will be using the net asset method. Okay, so we know that was the Hercules's net assets at the date of acquisition was 1,900, that we know, and because the parent has acquired 70% of the assets, the 30% would belong to NCI. So NCIs at acquisition, we need to add that. So if we take the 1900 and then multiply it with 30%, this is a proportion of net assets method, that would give us 570. Okay, so in total, parent and NCI together, the value would be 2,570. Now from here, if we deduct oh, sorry, oh, something happened. Right, if we deduct from here the total net assets of subsidiary on the date of acquisition, let's remove the underline from here, what we'll find is goodwill at acquisition date. So let's do a little total. So the goodwill on acquisition date was 670. Now there was no impairment in this particular scenario. Remember, no impairment. So there is no impairment. We can put 0. Okay, and therefore the total goodwill that we will be deducting, or the carrying value of goodwill that we will be deducting from sales proceed, will become 670. Okay, now then we have less carrying amount of net assets at the date of disposal. Now the question is quite generous. We know how much it is really straight away. Hercules is net assets at the date of disposal 2,400. If it is not given, again, as I said, you consider the total assets of Hercules minus total liabilities, that would be net assets, or simply take the total of the equity section. So now that will be deducted from here, 2,400. Okay, and lastly, the NCIs at the disposal date. Again, we need to add it back. Remember, we are removing everything that is related to subsidiary. All these are the assets, the first top two, therefore deduct. NCIs are kind of credit entry, yeah, sits between, usually goes under the equity section, yeah, and therefore it is a credit entry. So what would be the value of NCIs at the reporting date? Remember, it's not a fair value method, it is a proportion of net assets method. So whatever the net assets were of subsidiary on the reporting date, I keep saying reporting date, the disposal date, will give 30% of that to our beloved NCIs. Okay, and add that back. There you go, underline here, and if I minimize it slightly, you can see what we are doing, and that should hopefully give us what we are looking for. In this case, it's a loss of 250, and if you remember the double entry, what we said was that if there is a loss, you debit the statement of profit or loss. Okay, right, okay, so that was no impairment. Now let's see what would happen if there was an impairment. So let's type in with impairment, okay, and the pound signs as it is here. Let's put everything in center. So, well, sales proceeds are going to be the same as before, 2100. All this up to goodwill at acquisition, again it's going to be the same. So in the middle column we'll record all that, work out goodwill at the date of acquisition, no change. But then there is an impairment of 470. Okay, so if we record 470 here, and that should give us the goodwill at the disposal date. Okay, right, we have removed the impairment from there. If there is an impairment, really we need to deduct it from goodwill, because otherwise the value of goodwill is not reflected in true and fair manner. Okay, so that's that. The everything else is pretty much the same. That is same, and NCIs are also same. We are not giving any proportion of goodwill to NCIs. Remember, it's not a full goodwill method. If it was a full goodwill method, then the NCIs value at the year end would be different. But here in this case, no. What am I doing? Going back and then doing the total, and in this case we have a profit. Okay, so the profit will be reported in the statement of profit or loss. Can you see the difference? In our previous part, because there was no impairment, we actually deducted a large proportion of goodwill from the sales proceeds. We ended up getting a loss. But because we have reduced the goodwill that we would deduct from the sales proceeds in the second part, we have a profit. So this profit or loss will be reported in the state consolidated statement of profit or loss as discontinued profit or loss from discontinued operations. Remember, if you remember from IFRS 5, remember that? IFRS 5 discontinued operations, we said any profit or loss that we are going to be generating from discontinued operations, the operations that we are going to sell or sold during the year, is reported separately as a single figure in the statement of profit or loss. Okay, so that's how we are going to be showing this in our state consolidated SPL. Brilliant. So I hope you enjoyed this. Okay, please do go through this question one more time, and then after that you should practice question number, I'll state which questions in a second. Yeah, you should try and do complete disposal worked example number. There is no number, but it's on page 576, and then if you go to the end of the chapter, which are self-test questions, question number 1 up to question number 4, they are all good questions to practice. Okay, so please do practice those. If you run into any trouble, do give me a shout. If you have any queries, if you want to submit your answers for feedback, please do so. So all the very best, and thank you for watching.